Hey, good afternoon, everyone. This is Julie, J Auto Trading Strategies. I want to talk about what happens when your trade breaks down, falls to shit on you, and it does not work out. How do you use your analytics to just determine whether to, keep trading or just take your foot off the pedal altogether? A couple of things that I do is I look for my ranges. I want to see what the range opportunities were and what happened. As you can see, going from this session low to the red bands gave me perfectly my RTH PT3. So there was my range I expected for the RTH session. That's why I was expecting this touch of the range and pull back, and that's exactly what the market did. It approached the red band and then it pulled back to the Globex level. I did not anticipate was the volatility collapsing. I expected the volatility to rise and, provide the impetus for the shorts, but it did not. The volatility collapsed, and that allowed the short squeeze going into the 200 call wall right above it. Anytime you get a 00, you'll have all of your calls and puts sitting on that level. And so that's what happened. The market popped it back up to go to the call wall, ran up about 10 points above it to clear the stops, and then rolled over. Now we're rolling over on falling volatility though. So I am not expecting this to start taking off unless the volatility pops back up. So we're probably just sitting in no man's land right now. And it's lunchtime. It's 12:40, 12:38, something like that, Central. So how I can determine whether to look for additional trades after lunch will be to make my measurement going from the session low up to the full daily PT3 range of 320 points. So here's 321 points going to my Globex tail. So that would be the target, the Globex tail. And that's at 14 240.25. That Globex tail is blocking the daily PT2 on the close, which is what most algos have for their levels, and the Globex level on the close right below it. So I've got a confluence of two levels right above this Globex tail on the open. So I run my ranges both from the open and the close. And if you think about it, when you're talking about these higher time frames, the session opens and you can start running your calculations, and then the session closes. It's not going to be at the same location, right? It's going to be several hundred points apart. So we get a distribution on the open and a distribution on the close. So that, I think, gives me a big edge in the market. But right now, my edge fell apart, and I am waiting to see after lunch whether we get another run up to the full daily range potential at this Globex open at 14 240.25. And again, the volatility is collapsing, so I'm not looking for shorts, okay? All right. So I would be sitting here, sitting on hands, either waiting for the volatility to start rising, breaking a level, like if we broke through this Globex range and the volatility started picking up, then sell it. Otherwise, I'm going to be a buyer looking for the market to continue moving in the green lane today and go up a little bit higher. So it looks like the dealers are protecting their spreads. And mark one up for the dealers. It seems like the dealers always win. And today is a good example of that. Don't fight the banks, right? Don't fight the banks. Don't fight the Fed. All right, guys, y'all have a great afternoon. And let me know if you have any questions. I appreciate it. Thank you so much. Bye-bye.